Myself Vaibhav. In today's session of Visual JForex, I will be demonstrating to you the use of component block named pending open. This is an block which we use to place the orders for execution. It can be used for the buy trade or the sell trade, and in both the types we have multiple subtypes. It can be a limit order, it can be a stop loss order. So we have multiple options provided to us. No, not this. Here it is, pending open. We don't really have the description, so we straight away head to the Visual JForex board developed by Dukascopy Bank SA. This is the pending open block. We have to define these input parameters, including price, the instrument, trade amount, slippage, stop loss levels, take profit. Comments are optional. You can leave it blank if you want to, or simply to identify, you can leave any comment also. And the order validity is key, given that this order is going to be the pending open. So we had seen in the prior session the open at market. Now the difference between the open at market and pending open is on account of these two. We have to define the price at which the order needs to execute later on, and the validity of the order which we have to define using this variable. Then we get the output value which is same as the open at market block. Now for today's session we will be using any of the three start points. So I am taking this on candle, and also I am assuming that there is already an functional algorithmic structure in place, and we are straight away heading to this last point of the algorithm, that is the order execution. Now looking at its component, first we have to decide whether we want to go for the buy trade or the sell trade. Then we have these subtypes provided to us. It can be a buy stop, buy bid. It can be a sell stop, buy ask, place bid, place offer, buy limit, sell limit, buy stop. So all these options are given to us, and depending on the price, suppose if we are looking at the buy order and the current price is higher than the price at which we want to buy, then we will need to place the buy limit order. If we are looking to buy above the current value, then we will have to use the buy stop order. And if we are looking at the sell side trades, then if the value at which we want the order to be placed is higher, then we will have to use the sell limit. Otherwise, if it is below the current price, then we will have to use the sell stop. And then options are also given to us to determine whether we want to buy, whether we want to execute the order by the ask side or the bid side. So additional options are there. Now coming to another input value, we have to define the entry price for the pending order, and this is key. In case of the open at market, whatever is the current market price, the order will execute at that. The trade will happen at the market price. But in case of the pending open, we have to define the order uh, price and the difference between the current price and the price at which we want to define the order. Suppose if we are looking at 10 pips below the current price, then we have to define using the calculation expression. We will need to deduct the 10 pips from the current value, the market value of the underlying instrument, if we want the buy trade to happen above the current price, then we will need to add. So all these conditions can be defined using the calculation expression. I will give you a brief example so you can understand it better. So here it comes, the calculation expression. We will use this. Now all we have to do is look at the current market price, and for that we will have to retrieve the tick price. So if we are using the bid or the ask, any of these side can be used. There will be difference of the spread. Now we want the buy limit order to take place 10 pips below the current tick price. Then all we have to do is take the pip size, default instrument pip size, okay, and define another variable. We will name it buy limit difference, okay, and it is going to be 10 pips. We have this. Now we need to do the calculation. For that we will need to subtract the multiplication of the pip size and the newly defined variable of 10 pips, 10. So we will have to do a1 minus a2 into a3, and this will be the bar entry price, okay. So this way you can define the price as per your requirement. I have included this buy limit order price just for the example, and you can go for sell trade, you can go for buy stop, you can define the requirements, and accordingly you will have to carry out the calculation, and then whatever is the result you need to put it here. Then comes the question of the instrument. Instrument of your choice can be used here. All these options provided to you in the drop down listing are available for using in this block. Default trade amount, this variable is defined in million. When I write 1, it will mean 1 million, and usually we don't really trade in that big amount. So if you want to go for 100,000, you will have to take one decimal point, and now it becomes 100,000. Slippage comes handy when we have to look at the volatility, and we don't really want the trades to happen when there is too much of volatility, and the slippage can be quite big. So we have to set the slippage limit, and beyond that, if there is slippage, the order will not execute. Usually I keep it at 2 pips. Stop loss. Now comes the question of stop loss. You can define it in pips, or you can carry out some calculation as per your requirement. Now we are going it with the straight number. I have taken 20. So 20 pips will be the stop loss for this order. You can carry out the calculation also. You can keep it variable using the indicators like ATR. You can look at the volatility, and then accordingly you can place your stop loss and target price. Take profit can also be changed. Here this default setup is of 50 pips. For today's session we will change it to 40 pips. Comment is optional. And then comes the question of defining the book till time. Now the time till validity is important, whether you want your order to be valid for 1 minute or 1 hour or 2 hours, or you can even keep it in fraction of hours, like half an hour or 15 minutes. So all you need to do is again carry out the required calculation, create this new variable, and then put that value generated here. This is going to be in the long data type, so we will have to create the order validity variable here only, and it will be order validity time, okay, OVT. I have created the variable. Now to define it, we will need to carry out some calculations. Our order validity time is going to be of 15 pardon me, is going to be of 15 minutes. It's taking a bit more time. Till then we will take a look on the kind of parameters which we will need to define the, okay, so here it is. Oh, some error has occurred. Let me try it once again. I think some problem is there with the internet connection. So here, now if I have to change the internet connection, it will take a bit more time. So instead of that, let me try to explain to you using this variable which we can see. So here we have to take tick time, and okay, we won't be able to do that. Let me see if I can manage it fast. Okay, we have changed the internet option. Okay, now let us see if it will work. Okay, thankfully. Here we have to take the tick time. So whatever is the current time, it will be reflected in this variable. Then we have to create one more variable, and that is going to be the number of ticks in 1 hour. Now, usually 3.6 million ticks are there in 1 hour, so we have to take this variable and count the zeros properly to make sure we are not really making any mistake on this count. Okay, I think I'm right. It should be 3.6 million. Oh, it should. I have included this in the value. It should be there, and we will change it to tt. Okay, I have created new variable, and we now want to cut it down. This is equivalent to 1 hour, and we want it only for 15 minutes, so we will have to divide this second variable by 4, and I have to see that we are doing the calculation right. Okay, so it should be a1 plus a2 divided by it will be divided by a3. Okay, so we will be taking the 1/4 of 3.6 million, and we will be adding that to the last tick time, and the result is going to be this variable order validity time. We connect it here. Okay, so we have defined both the variables which are of critical importance when we are working with the pending open order, that is order validity time and the order execution price. So these two parameters which we have to define separately compared to the open at market. So I hope you got the point. This is for only example demonstration purpose, and we can take multiple routes possible to define these two parameters. There are various ways in which you can define these variables depending on your requirement. Thank you all for joining in. Do subscribe to the Dukascopy webinar channel. Goodbye.